Welcome to the Industry Experts panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we are hosting one of the most controversial guests that we've ever had to the show. He is a man who has written several bestsellers and is quite famous for his extreme predictions and forecasts based on large amounts of information to support it. Mr. Harry Dent joins us today, and everyone is in for a treat as we tackle many of the critical subjects which are important for investors, savers, and basically anyone living within the Western world who is trying to make sense of what is happening. Harry, welcome to the show. How are you today?
Nice to be here, Michelle.
Oh, we're thrilled. Harry, we want to start off with the U.S. dollar. Do you think that we will have a stronger U.S. dollar ahead of us?
Yes, I do. First of all, the U.S. dollar has been going up since January of 2008, exactly when we entered the great financial recession. It's been going up since then. Gold bugs come out all the time, say, oh, the dollar's crashing, dollar's crashing. I say, are you looking at the same dollar I'm looking at? They want it to crash. They think printing money is bad, which I do too, but the U.S. has been printing far less than the Europe and far, far less than Japan and far less than China's been creating debt through other means. So we're the best house in a bad neighborhood. The U.S. dollar also, in the worst of the crash, the second half of 2008, for people who remember that, the dollar went up 27%. It was the safe haven in the world, and gold and silver went running to mommy. Gold was down 33%, silver down 50%. So gold bugs have been telling people when things get bad from all this debt, and I agree with them on all the debt part, this unprecedented debt and financial asset bubble, gold and silver will save you and the dollar is going to go to zero. We say the opposite. Gold is going to go to $700, probably closer to $400. Silver is going to go to $6 to $10, and the U.S. dollar is probably going to go from today around 94 to 95 up to 120, maybe higher. The U.S. dollar is the safe haven in a deflationary environment. Gold bugs are living out the inflationary crisis of the 70s. We're in winter by our model, long-term model, very good model, by the way, not in summer like we were in the 70s with high inflation. So inflation is like temperatures in my model. Deflation comes after you blow up a lot of debt and a lot of financial assets with debt. Those assets have to deflate back down to reality, and that destroys money, destroys like trillions and trillions of dollars. We could globally destroy 100 trillion out of $300 trillion in financial assets out there easily. And that's what we did in the Great Depression. And that's why we had deflation in the Great Depression, not inflation. Gold is an inflation hedge. The dollar, being the best currency and the reserve currency in a bad neighborhood, is the safe haven, and so is cash. Just simply hold on to cash and high quality bonds, and they benefit from deflation. The AAA corporates and the 10 and 30-year treasury bonds in the 1930s were the only asset category that went up. Commodities went down in the 30s, stocks went down, real estate went down. Only the best currencies, cash, and the best bonds do well when all financial assets reset back down to where they should have been in the first place.
That's great news. You are one of the only people saying this.
Yes, I am.
That's fantastic.
I even disagree. I mean, gold bugs and I, when I give presentations and debates with gold bugs like Peter Schiff, the first half of our presentation will be very similar. Unprecedented debt growth, bubbles everywhere. They just don't, gold bugs don't study history and see what happens when bubbles burst, not the economy burst or inflation burst like in the 70s. When bubbles burst, money is destroyed, and that's less money chasing the same goods. It's deflationary. And the reason that's so important, gold bugs and I can both be right, and we will be right about this crisis. You don't have a debt bubble like this that ends well. There's no exceptions in history. The difference is the investments that will do well will be the opposite. They're saying the dollar will be bad. I'm saying the dollar will be good. They're saying gold will be good and silver. I'm saying it'll be bad. That's a huge difference.
Wow, wow. Now, Harry, the S&P is up by 1.4% in 2018, including reinvesting dividends. Is the bull market over? And if so, why? And if not, where are we headed and when?
Okay, first thing, I think, yes, we are in this rally since early 2009. And by the way, this rally has been pretty much 90% artificial stimulus, period. The baby boomers peaked in spending in late 2007. I predicted that back in 1989 when I also predicted the Japanese bubble would burst because its generation was peaking decades before us. It's baby boom. And it had a real estate bubble just like us. And it burst 60% and never came back. Stocks burst 60 and then later 80%. That's what bubbles do. They don't go down 30, 40, 50%. You don't get a correction, and you certainly don't get a plateau that people are saying could happen. It never happens in history. So we should have peaked in late 2007, but when we crashed this time, unlike the Great Depression or any crisis in history, central banks around the world just says, we're just going to fill the tubs leaking water. We're just going to fill it back up. Now we're talking 15 trillion and still rising in quantitative easing, free money created out of thin air, poured into the economy. And on top of that, since the US was the first to taper, hooray for us with a little bit of courage. But hey, that causes difficulty. So what does Trump do? Come in and cut taxes for corporations when they have the highest profits as a percentage of GDP in all of history. These people don't need a tax cut. They're not going to invest it in capacity. They're going to keep doing what they've been doing with free money from the Fed, buy back their own stocks and do mergers and acquisitions that just rearrange the pie and don't create growth for the economy. So this is going to end. It's going to end worse only because of this stimulus. Now, the way I look at it is this thing's gone on, and we're in the last wave. Stock markets tend to go up, wave 1 up, 2 correction, 3 up, usually the biggest wave, 4 correction, 5th wave up. Since early 2016, when we had the last reasonable correction, we've been in what I call the blow-off rally, and that accelerated with Trump, because Trump walked in, and even us, we got way bullish again. I said, look, Trump's going to come in and cut taxes. You can't argue against that. That's free money, especially to corporations and profits. So I think we've seen the best of that. I do not think we're going to see 3 to 4% sustainable growth. It's impossible. Workforce growth is 0 in the decades ahead. We measure demographics more accurately than anybody in the world and project it. And productivity, guess what? Old people aren't productive. They not only retire, they eventually die. What could be less productive than that? And so productivity has gone from 3 to 4% back in the 80s and early 90s down to 0.5%, and we project it's going to go to 0 or lower in the next decade. So how are you going to grow 4% with 0 workforce growth, the people actually producing goods, and almost 0 productivity and maybe less? So we don't see this. So we think when the markets get this, probably somewhere between late this year and at the latest, late next year, I think the markets are most likely to peak by about August this year, late August. And we're going to start to see a crash. And it's going to, Italy's blowing up again. We've been predicting this for years. Italy's been bankrupt for years. Banks over there give just enough money to zombie companies to keep them through the next debt payment back to them. So they lend them just enough money to pay back to them to keep them from dying, but not enough money for them to grow or do anything productive because they know they'll just get in more trouble. So Italy's going to blow up. I think this growth story is going to peter out in the next year. We're just not going to grow even with all these tax cuts. But whatever, the markets are going to get reality. They just got reality on Tuesday when, the Italy announcement. Hey, yeah, the cuckoos are taking over Italy. They want to leave the euro maybe, and they want to spend more money, not go on austerity anymore. Sorry, bad news for Europe. Italy has 23% of the debt in the Eurozone, dominates it, and worse than that, 40% of the total bad debts and loans. Italy is going to sink the euro and Europe, period. Makes Greece look like nothing. Greece is 3% of the debt there, and they were able to bail that out. There's no way to bail out Italy. So Italy is the ticking time bomb in Europe. Trump's promise of 4% growth is going to falter within the next year. I'm totally convinced of that. And that's going to be the big time bomb here, along with real estate's getting very bubbly. And guess what? We're doing the same things before. Now low down payment loans and easier, we started off a little more responsible. We never learn our lessons. And countries don't get, Michelle, super high real estate costs are bad for the economy. It kills the young people who are your future and only rewards the old people that are going to retire and die. It only makes government revenues a little higher local from property taxes. Businesses have to pay higher wages. Young people have to pay higher percentage of their income just for a damn house and don't have enough money to spend on other things, just like if oil prices went up to $5 a gallon, only much worse. That's the problem in the United States. And of course, the rest of the world, Asia, my God, China has the biggest real estate bubble in history, the greatest ramp up in debt in history. And talk about an artificial economy. They're building stuff for nobody. 27% of condos empty, and they're going up at the speed of light because Chinese buy them anyway. They're empty, 27% empty, measured by lack of use of electricity, and they let them sit there and think they're going to keep going up. Chinese investors are the biggest idiots in the world. Chinese government is the worst government in the world outside of corrupt third world countries because it's a top-down system, has no respect for markets, and keeps building stuff for nobody. How does that work? If businesses build too much capacity, they go bankrupt because prices collapse, their overheads go up, and they go bankrupt. China's going to fall like a rock when it falls. And when China may be one of the early triggers, I think it's going to be later. But when China's real estate market blows, the whole world's going to feel it. It's going to be the biggest single event, bigger than Italy, bigger than our real estate crash, bigger than our stock market crash. And that is coming in the next year or two for sure.
I actually saw a special on that where it showed all of the massive construction taking place and they were all empty. It was amazing.
Do you know any country
heard of anything like
where investors buy empty real estate at super high prices? China also has the highest real estate prices compared to average or median incomes in the world by far. Hong Kong #1, and then Shanghai, Beijing, Tianjin, and all Shenzhen. It's unbelievable. But you're right. They have built. If China didn't build another infrastructure, another office building, another condo, or road or railway for the next 10 years, they could grow into that. And,
they'd still have too many apartments.
No, and they'd still have some empty ones.
Yes.
And so this is the greatest, this is typical of, I talk about gold bugs, don't understand bubbles and inflation versus deflation argument. Economists don't understand anything. Economists think China's the new model. Oh, why have free markets when governments can just drive the economy? Well, Russia already tried that and failed. China's doing it on steroids. They're going to fail worse. China's never going to be the same again. China's workforce has already peaked. The only emerging country in the world that does not have growing demographics and workforce for decades in the future, and it's overbuilt. And yes, it still has some urbanization to go, but it's already built most of that. China is done. China's going to collapse, the greatest of any major country in the world, and it's going to take it at least 10 years to come back. And when it does, it'd be lucky to grow 2 to 3%. You'll never see 8 to 10% growth in China again. Never.
Wow.
India.
Now, Harry, you mentioned gold. Now, yep. Gold is trading at $1,300 and can go either way. We could see a drop by about 10% or a rally by 10%, which would be a major breakout or drop. What is your take on gold pricing right now?
Okay, well, here has been our take. We called the drop in gold. We got people out of silver and gold in April of 2011 on the day of the top in silver at 48, 49 bucks, and just a couple months before gold peaked in September. So we may be 5 to 10% early on gold. We said gold and silver are going to collapse. And we said, especially once gold broke that 1,530 line in the sand after it went like this for a couple of years, we said, it's gone. Well, it went to 1,050. Now, when it went to 1,050, we said, okay, it's gone down enough for now. We're going to have a bear market bounce, quote unquote, a bear market bounce, not a new bull market rally. We said it'd go up to 1375 to 1428, somewhere in that range. It's already hit 1375. Now, right now, I'm putting out an article in my newsletter next Monday. We got this perfect, I call triangle. Gold keeps trying to break 1375 and fails, but it keeps making higher lows. This triangle is going to come to a head in the next month. And it's either going to break out substantially above 1375, somewhere in the 1400s, or it's going to break down. And I tell you, the next stop is 700, 750.
Wow.
So ultimately, I think gold is at a minimum, we've said this from the beginning, is going to go to its 2008 crash lows of 700 to 750 in that range, and ultimately to erase the bubble by my bubble model that I have in my recent books, it would have to go to 450. So when gold gets down there, I'm going to be buying it.
Wow.
Because there's another commodities peak every 30 years. In 2008 to 11 was the last peak. The next one's 2038 to 40. The next boom globally will not be developed countries leading. It will be emerging countries, and emerging countries, especially China and India, consume gold and commodities like crazy because they spend much more of their money on that. They don't spend as much money on healthcare and financial services and big cars and big houses and stuff. So I think commodities are going to be a big boom ahead, but not yet. And gold is an inflation hedge. It's not a deflation hedge. When deflation sets in, gold's going to drop like a rock. The reason it dropped in 2013 so dramatically is the gold bugs and the gold investors are saying all this money printing has to create inflation. Well, Japan tripled its money printing in early 2013, and inflation kept falling. That was the signal that, oops, what we've been saying, deflation is the trend here, not inflation. Money printing is fighting deflation. It's not creating significant inflation, and it won't. If $15 trillion of free money printed more than any time in the world, and almost 100% of GDP now cumulatively in Japan, and they got zero inflation, if that doesn't create inflation, what the hell is going to do it? Nothing.
Right.
Gold is dead. Now, when it goes down, gold could be one of the best investments. I say our best investments for the next boom, a couple of years from now, when we have this big crash and finally get over this stimulus and realize it's not going to work, is going to be emerging countries, especially Southeast Asia and India, especially India, and the metals. Metals are harder to expand than agriculture and cattle and meat and stuff like that. So it'll be the metals that do the best in the next commodity bubble. And of course, gold, silver are some of those, and iron ore and things like that are going to do very, very well.
Now, Harry, are the problems of 2008 behind us, meaning the obligations that were taken on by our central bank, the Fed, using QE and other programs designed to unwind and normalize and hold the system intact with no backfire, are these working?
Well, they're working. Okay, it's like, okay, I'm feeling really bad. How do I feel good? Well, how about some heroin? Or how about a couple bottles of wine?
Uh-oh.
How about some crack? How about
not a cure?
Drink coffee all day. How do that's what they've done. This is artificial. Of course you can make yourself feel better. The next thing they're going to do if they get around to it, I don't think they'll make it. Trump just cut taxes. At the least time we've ever needed a corporate tax cut, and the least time it would do any good, because companies overexpanded in the boom, just like China, but not as much. But we've got excess capacity. Why would companies invest in more capacity, increase their overheads, and reduce their properties when they can take those extra profits and buy back their stock and increase their earnings per share, even if they're not growing? That's what they're going to do. So the next thing is just send people $10,000 checks in the mail. Well, of course, somebody 10,000. Okay, I'll go buy a Hyundai, a used Hyundai. So it works short term, but it's like a drug. It's not real. Drugs make you feel better today, hype up your system today, including steroids. I could add to that list, and they kill you. I watched a physical trainer that I was taking a class from back in the 80s. Literally, I went on vacation for 2 weeks, came back, the guy was dead. He had taken steroids, he was a weightlifter all his life, and in 2 weeks he shriveled up and died. That's what happens when you use artificial means to increase growth beyond natural means. Investment creates real growth. Demographics and productivity from aging of population into their peak spending and productivity. These things are the types of things we measure that create real sustainable growth and then don't. This is all artificial. Printing money, throwing in the economy, pushing interest rates a couple points below so everybody can get a lower mortgage, a lower car loan, companies can buy back their stocks at almost no cost, and on and on and on. This is all artificial. It's something for nothing. Now, I ask any common sense person anywhere, liberal or conservative, has life ever taught you that you get something for nothing? And my answer is, it hadn't taught me that. When I get something for nothing, I get my ass kicked. That's what happens down the road. And addicts get their ass kicked. At some point, you got to detox. You got to hit bottom and detox. That's what I'm predicting for the next 2 to 5 years. We're going to finally crash despite stimulus, because you can't get something for nothing. You can't work forever. When the fundamentals keep getting worse by our indicators into 2020, and they don't really start to turn around until 2023, 24 forward. So fundamentals keep getting worse. We keep living off of short-term free lunches. It collapses. We finally deleverage all this debt. Of course we still have the same problem in 2008. We have more debt. Corporations have way more debt. Consumers have marginally more debt, and government has way, way more debt than they had back then. The government debt's doubled since then. Doubled. Now it's 21 trillion going. It used to be 10. So we're in more debt. We never dealt with the crisis. We never deleveraged, restructured the debt. What does a business do when it has too much debt and it still has a viable business? Which the U.S. is still a viable country. I think most people would admit long term. Best house in a bad neighborhood, even demographically. You go through Chapter 7. You reorganize your debt. You tell the creditors, look, if you just shut us down and do a fire sale, you're going to get 10 cents on the dollar. But if you will just take 50 cents on the dollar, which is 5 times as good, we can move forward and turn around and we can both grow again. That's Chapter 7. That's what we need to do. Nobody wants to do that because no president, no Federal Reserve or central bank chairman wants to have a debt deleveraging like the early 30s on their watch because it sucks. No addict wants to go through detox because it sucks. That's what we have to go through. And I'm just telling people, I can't change this. I didn't create this law of detox and addiction and all this sort of stuff. It's just that this is going to happen. So as an investor or business, the only way to benefit, and in fact, you could benefit massively, businesses that hunker down will do nothing but gain massive market share long term as their competitors fall. They'll be able to buy assets and take over customers from their competitors as they fall. What could be better than that? But you just have to make sure you're one of the survivors. Just hunker down. You don't have to make money in the downturn. Just be the best house in a bad neighborhood, like I call the U.S. in the developed world. Investors, if you just get in cash and safe investors, take your profits. Don't look a gift horse in the mouth. We've had the greatest boom in history. Now an artificial rally on top of that. Real estate prices at new highs in most areas. Double in Miami, where I used to live from the last bubble. Take your profits and run. Maybe you missed the last 5 or 10%. Oh, Baron Rothschild said when asked in the 1800s, he was the richest man in the world supposedly back then, what's the secret to your wealth? He said, I always got out a little early. Duh, because bubbles burst. Now here's another rule, Michelle. From our research, I looked at the 10 greatest stock bubbles of the last century, from the 1929 to the Nikkei to the biotech recently, the tech bubble, and on and on and on. Those 7 bubbles, when they finally crashed, the first crash was half of the total crash, 42% on average in 2.5 months. When this bubble finally bursts, it's going to smack people so hard, they won't know what hit them. And everybody's saying, well, why should I get out here? Why should I get? It keeps going up. Okay, stay in there, you idiot. Or listen to Baron Rothschild. Get out a little early. But I'd say right now, I don't see signs of an imminent weakness right now, but I'm telling you, I'm predicting right now, late August is the time when we make a new high. That'd be the 5th wave of a 5th wave of a 5th wave of a 5th wave. That would look like a top to me. That's a good time to get out a couple months from now. And just, see what happens. And if we turn around and make new highs months after that, then we can get people back in. We've done that a number of times. We got people back in the day Trump was elected. We said, we're going to see a big rally here. I don't care about the fundamentals or anything else. You can't have a massive tax cut aimed at corporations and business owners and not be good for the stock market. So, but it's caution is warranted here. That I can't even compare this. In my book, 0 Hour and Sale of a Lifetime, the most recent 2 books, I compare this bubble to past bubbles, and you can't compare it. It's just beyond.
Beyond the Great Depression, beyond all of it.
Yeah.
Wow.
And it's in everything. 1929, it was a farm bubble and it was a stock bubble. It wasn't a big real estate bubble. Commodities had burst in 1920. This is everything. This is commodities, real estate, stocks, large cap, small cap, emerging, developed, all around the world globally. This is the biggest and most pervasive bubble in all of modern history, and China is the epicenter of it, not the United States. We're number 2 in Europe. China's the epicenter, and China is the greatest single country bubble in all of modern history. So this is not going to end well.
Now, Harry, speaking of China, in 7 years, China's gross domestic product will be bigger than that of the United States. And in 20 years, China's military is on course to officially surpass that of the US and become the next new empire of the 21st century. How will that change life for Americans in the next few years between 2018 to about 2023?
That's not coming from me. Now, let's play back the video here.
Okay.
1989, we were saying Japan's going to have a major long-term collapse in their bubbles and their economy and demographics, while the rest of the world sees the greatest boom in history in the 1990s. Now, do you think that was controversial back then? People thought I was insane.
He's crazy.
I was the only guy that was right about that, because we were looking at the fundamentals. We were seeing that Japan's real estate was in a bubble that makes ours today look like nothing. It's more like China's today. And their stocks were in a bubble similar to ours today. So we knew that had to blow. Economists back then were saying Japan is going to become the #1 economy and surpass the United States, and I couldn't stop laughing. Japan has 35% of the population. That would say to me, you mean Japanese are going to be making $180,000 a year household when we're making 60? Are they that good? No, they're not that good. So we're looking at the fundamentals. Everybody's just extrapolating the past. Japan went from a emerging country to a developed country in 30 years, the fastest in history. Korea followed them. I'm in Puerto Rico today. Puerto Rico did that recently. That is what made them look so good, but that was a short-term exponential move. Japan, we knew their demographics were peaking and falling like a rock. We knew they had the greatest bubble of our time back then, a bubble we were going to see in the future when our baby boom came around and did everything to extreme. So we saw that coming. China is going to fall, what did I just say earlier? Harder than any economy in the world. They don't need to build another thing for another 10 years. So how is their GDP going to surpass us? And certainly not, it has surpassed us adjusted for cost of living, but not in US dollars. They're not even close. They're like 50, 60% of us. This is not going to happen. They are not going to become the #1 country.
I see what you're saying. Okay.
Somewhere down the road, they might, when they fully urbanize. They're at 59% urbanization. Most countries peak between 80 and 90. Urbanization is the only thing China has left. And again, they have built enough to accommodate their urbanization for another 10 to 15 years without any growth in infrastructures and stuff. So China is not going to be #1. It is going to be #2 for a long time. And then the farther we go down the road, India is going to become #2 or 3.
Oh, that's
India
interesting.
Is next China. India is only 34% urban, has massive urbanization. That's the biggest way countries get rich. Demographics is the second way. Urbanization, when you move people from a rice paddy, and I've measured this in India, China, and Brazil, the 3 largest emerging countries, from the rural area into a city, their income tends to triple. So if you want to leverage GDP like China's doing today, you just push people from rural to urban. The problem is China's doing it faster than is natural and that their economy can accommodate, and they're overbuilding to encourage it, and that overbuilding is going to kick them in the ass.
Is that why they're building all of that? They're trying to pull people in, and they're just not coming.
And right now, I tell you, something happened a few years ago that nobody noticed but us, because we're looking at the fundamentals. These migrant workers who've been rushing from rural into urban areas peaked in 2014, and they've been going back to the rice paddies. I'll tell you why. They're not registered citizens. They're rural migrants in cities where they're not registered, no access to any social services, education, etc. They make the lowest wages. They can't afford the sky-high condos, and a man in China cannot get laid, get a date, or get married if he doesn't own a condo and a car. They can't afford that condo. So you have 3/4 of young migrant workers in these cities, unmarried, pissed off. The older people are going back to the farms because they still know how to farm, the migrants. The younger migrants are just going to sit there and revolt. And China's going to have a huge crisis. But the migrant population is not only not growing at 10% a year anymore, they're shrinking. China's miracle of pushing people in the cities and overbuilding. They were overbuilding for people in the future. Now there is no future, that these migrants, at least for now, and probably for a decade to come, are no longer going to come. They are too disadvantaged, and the costs are too high, and they have to choke on the smog and traffic like everybody else. These guys are going back, and the ones there are going to squat in empty condos and revolt and try to kick those guys out. Thank God. I think those guys should squat in the empty condos. At least somebody will use these damn things.
That's it. Once they move in, how are you going to get them out? Especially if they are. Wow.
So that's going to be their only salvation. They'll just say, okay, we're just going to squat in these empty condos.
It looks nice.
Actually, you should.
Now, Harry, what are America's advantages on the global scene? What is the competitive edge that the U.S. brings to the world in terms of commerce and industry right now?
Well, okay, demographics. That's in developed countries who are already fully urban. Demographics is the number one. Emerging countries, the urbanization is number one, and then the demographic trends. In the demographic world, East Asia, Japan, Korea, Taiwan, all these, and even China, East Asia is done. They have demographic decline like Japan on a 20-some year lag to Japan forever. So demographics are working against them, and really bad. All of Southern and Central Europe, Austria, Germany, Italy, Greece, Portugal, Spain, demographics off a cliff. Germany has the worst. Germany looks like Japan to us in 1989, okay? And nobody sees that coming. So the demographics of most of Europe and East Asia, our big competitors in the developed world, are way worse than ours. We just go sideways. Baby boom, crash, baby bust, echo boom, millennials take us back up to the same level. We will come back up to this level of car buying and house buying and stuff. We won't go higher. We will never see a need for more real estate than we have now. But at least we come back. So we're the best house in a bad neighborhood demographics. When it comes to stimulus, central bank stimulus compared to GDP, we're at 24%. Europe's at 29%. Europe's at 42%. Japan's at 94% of GDP. We created less artificial stimulus. Best house there. Productivity, we're higher. Now, here's a really good indicator that only Lacey Hunt, he's an economist I have speak at our conference every year, the only classically trained economist I know that knows what he's talking about, even though he was trained as an economist, which is a huge disadvantage from my point of view, because they study all the wrong stuff. He measures money velocity. If money velocity means money's getting turned over, money that gets created by central banks or whatever, or just profit stuff, if it's being reinvested productively in new capacity that will create more jobs and more higher productivity, money velocity be rising. Well, money velocity has been falling for everybody since 1998, but the US is way higher in money velocity and way more stable than Europe, and Europe's way higher than Japan and China. Japan and China are the greatest BS economies in the world. Japan's got the most stimulus, quantitative easing, and China has the most debt stimulus. What China does is basically the central government just guarantees any debts of local governments. We'll guarantee it all and just build whatever you want to build. And so they build something for nobody. And then the government keeps giving them, more credit. So, so money velocity, we are by far the clear favorite in the developed world. So we're a bad house. We've stimulated too much. We have too much debt. Our demographics continue to decline for years and then finally turn around. But overall, we're the best house in a bad neighborhood.
Down the street. I got you.
We're going to be the #1 country for a long time, and India is going to be the up-and-coming challenger, while China's more like, kind of just moving maybe more sideways for a long period of time.
Interesting.
So we are in a good place. Now, there's 6 countries from Australia to Sweden and Israel and some others who actually have strong millennial generations. Australia is a country that has rising money velocity, one of the few. And as an example, and I lecture there every year or so, they have a growing economy in the future rather than flat to declining demographics. So there's 6 small countries. So we say when this crash bottoms, invest in these 6 small developed countries, invest in the U.S. and the aging sectors like healthcare and pharmaceuticals and wellness and things like that. God, nursing homes are going to grow like crazy.
Oh my.
Dying of the baby boom generation. And then invest in emerging countries. And you know what? Do I want to invest in Latin America when the productivity and the demographics in Southeast Asia and South Asia, like India, are far stronger? No, Southeast Asia, India, and metals, and these 6 countries. That's where you're going to make money. The next boom, this boom from 83 till now, has been everything. Real estate, commodities, emerging, developed, Asia, Europe, US. The next boom is going to be much more selective. And so we got to guide people through this crash, which means get safe, protect your assets, get in defensive assets. And when the crash happens, don't just go by. I think real estate in the US will never see these levels again. Japan's already crashed now almost 2.5 decades. Real estate's been down 60% and never risen, even when the millennial generation came along. Smaller, but still substantial, because old people are dying faster than young people are buying houses, and old people are sellers of real estate. Wow. Another simple demographic dynamic that economists are ignoring because they don't study the right stuff. They study monetary policy and fiscal policy and government policies. Great. Government's 20% of the economy. Guess who's 80%? Consumers and businesses. And 67% to 70% is consumers. We study consumers because they drive the damn train. And we know everything about it. I know when the average person will weigh the most, age 60, eat the most calories, 14, buy the most potato chips in a household, 42, buy the most cars, 54, houses, 41. Anything you want to know, I can tell you. We study people. And what people do as they age is incredibly important, and economists don't take it into account at all. All they see is there's going to be more retirees versus less workers. They do see that one. Duh. That's the only thing they see in demographics, the least important thing, although that's important.
That's incredible. Now, Harry, shifting gears just a little bit, are you seeing artificial intelligence as one of the world's biggest trends in the future as we head into the era of quantum computing?
Yes, I'll tell you what I see bigger, and it's down the road. Oh. I see biotech. I see a big jump in life expectancy. I study cycles. And my demographic cycles for the whole world, even the emerging world, is slowing down in births and in demographic growth down the road. They did peak at different times. But by 2100, there will be no growth in this world demographically. And by 2040, totally demographic growth will have peaked, for spending and stuff. But I have a longer term indicator that says, no, we're going to see another big surge in innovation and stuff into the next century. And the biggest thing I see happening, yes, artificial intelligence is needed because we are aging and there's going to be fewer these younger workers are going to need to be armed with powerful technologies to be able to earn enough money to keep the economies going when more and more people are retiring or dying. So AI is really important. And technologies always kill old jobs. I mean, we used to all be farmers and trappers, and now 2% of us produce all we can eat and export to food. So this stuff is saying, we're going to eliminate all our jobs. That's just a stupidity.
That's incredible, right? How small amount of.
The biggest thing that could happen, because demographics is in a downward spiral forever unless something changes. If biotech allows us over the coming decades, let's say 2030s through 2060s forward, to start seeing our life expectancies expand dramatically like they did from the early 1900s into the 50s and 60s. Mm-hmm. We could be living at some point 100 to 120. Now, here's why that's important. Here's the demographics right now, Michelle. Average person in the United States enters the workforce on average, age 20, retires at 63. 43 years in the workforce. Then if they make it to 63, they're not going to die at 79 or 80, the average life. They're going to die at 84, 85. They're going to be on the dole for 22 years. Half the time they're in the workforce. That's not possible. We had all these entitlements we developed in the 30s and 40s when people were dead by 70, most people.
Right.
So that has to change. We have to stay in the workforce long. Now, let's say we live to be 110 in the middle of my range and entered at 25, a little more education. Now we're in the workforce 85, and we retired at say 95. Now we're in the workforce 70 years instead of 43. So we produce 80% more in our lifetime. That That reverses the demographics of aging because we don't need as many births to sustain the economy because we work much longer and we get more productive longer. And that would change the demographic dynamics. So I think biotech and life expectancy and life enhancement and extension could be the biggest thing that happens in the coming decades. I'm just not going to live long enough to fully see it. I'm going to be out of here probably, I estimate, late 2030s. That's enough to see the best part of the next boom and to prove I was right, damn it.
I'm going to hang around to prove it. And I think that's completely foreseeable. People are much healthier. I mean, there's a huge difference.
70-year-old today to be retiring at 63-year-olds.
Right.
People even looked at me. I just turned 65. And, you know, when my grandmother was 65, she looked like she was on her deathbed.
I know. It's like 50's the new 25.
Yeah. You know, I'm more like a 50-year-old in the past. And that's the way. And imagine, and we haven't even seen biotech. This is just from healthier and wealthier than in the past. Biotech hasn't even really kicked in mainstream.
Yeah, it's very exciting.
We have a cycle, Michelle, for that. Technology surge mainstream every 45 years, like steamships, railroads, autos, just to be overly simplistic. And now let's say AI and biotech will be 2032 to 2055 will be the next mainstream surge. And that's when the world will change. Some of the predictions that technology people are making now, I think are a little early, because the internet technologies are peaking and things like everything from blockchain to biotech and AI are just emerging. They're a niche market. They don't change the world till 2032 to 55 approximately, and then the world will change dramatically. And that is the only way I can see my longer term cycle saying, no, we still have major new heights to go to globally. 50% of the world is still in rural areas and emerging countries. By 2140, when my 500-year cycle peaks, we will be fully urban, fully middle class, and probably living to be 120 years old.
Wow. Wow. And getting better all the time. I mean, that will only increase.
Well, that's what technologies and even population growth, but especially technologies throughout history are exponential. Now, they go through cycles. Very dynamic cycles, and we're getting ready to go through a negative one. They are exponential. So when people say, when I say people will be living to 120, 60, 80 years from now, and blah, 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 that's like inevitable if you look at history.
Actually, it is.
Who in 1900 would have thought we'd be flying around the world? People didn't even think cars were real back then.
Oh my gosh. Harry, this has been an amazing interview. How can everyone follow your work?
Okay, best way, we have a free newsletter. Go to economyandmarkets.com. Now we have, dentresearch.com. We have a whole array of newsletters and services and investment services and stuff, but that's the way to get to know. So if I've said something here that interests you, nobody's going to believe me from one interview. I'm saying stuff like you say that's so controversial and contrary, but we've done this before. Again, 1989, people thought I was insane to say Japan's going to crash and not going to be the #1 country, and the U.S. and Europe are going to have their best decade in all of history. Also, my latest book, 0 Hour, came out late November. There, we're not just talking about demographics in the world and this crash and how to benefit, which we do. We're also talking about the greatest political and social revolution since the advent of democracy itself in the late 1700s on 3 cycles, 3 of our most key cycles that are converging at the same time in the coming decades. So we're not just saying, this is a time to profit, to protect your money and your wealth and profit from the downturn, which you can more than any time in history, from deflation and deleveraging. It's a time to expect massive social political changes. We're seeing the beginning of this with Brexit and Trump and populist movements. This is not how it ends. The all-star wrestling fans are not going to dictate the future of our economy as they are now. They help break it down and say, look, something's wrong here. And something is wrong. The bottom 20 to 40% has been getting the shaft, especially since 2000. So of course they're unhappy. But these are not the leading edge thinkers or technologies or stuff. We're going to see a revolution that makes our global economy and our corporations, literally our organization of our corporation networks, bottoms up, consumer driven, not top down, management and bureaucracy driven. Bureaucracy is going to be totally automated in the software, just like the stock exchanges today. Perfect example of a network, real time, organized around customers. Turn it on. Every chaos happens. Everybody gets what they want minute by minute, and then turn it off, and it stops and takes a rest. That's already the case. The whole economy will go in that direction. That's going to be a revolution. That's the real revolution in technologies, change how we work. And of course, as I said earlier, allow us to live longer, to be more productive and work longer. And that's how we grow without having tons of babies, because we're never going to have tons of babies again.
Well, it's an incredibly exciting time all the way around, financially, AI, life expectancy. It's just an incredible time to be alive, really.
We got to get through the crash first. We have to deal with what we didn't deal with in 2008 and 9. We didn't deal with it at all, like we did in the Great Depression. We did deleverage massive amounts, especially of private debt back then. We're not dealing with it, so we're going to have to deal with this. It's going to be forced on us because you can't live on heroin forever without hitting bottom and detoxing. So we're going to have a financial detox in the next, especially in the next 2 to 3 to 5 years. If you see it coming, you're going to do nothing but make money, because every time the stock market drops or real estate market drops and you're in safe investments or cash, now your cash and safe investments buys way more for the next boom.
So hold your cash, just wait it out.
Be in safe bonds, treasury bonds, AAA corporate, stuff like that. We have a lot of investment service, our company, that make money in up or down markets. You can't buy and hold is dead for a while, okay? And so it'll come back around 2023, 24, where you can literally buy stocks and real estate again and hold it. This is not the time to buy and hold, because we're in bubbles and everything has to reset first. So you got to.
We don't see it very long time. That's kind of a short, depressionary time before we start to see a really brighter.
But people don't realize, in the Great Depression, even though the whole 30s was kind of depressionary, basically stocks bottomed in late 32, real estate bottomed in early 33, and commodities, and everything went up forever after that. If you'd have just weathered those 3 years,
make it through,
been safe, you could have bought anything and looked like a hero. Anything, any real estate standing, any stock still